annual general meeting as a publicly listed company. We want to start off with a word of prayer. So I'm going to ask Ricardo Skyers, our brand manager for Refresh, to come forward and say a word of prayer.
Morning. Let us pray. Dear God, as we gather today as members of Derrimon and Derrimon family to reflect on the past year and to look forward to the future, bless our annual general meeting with your presence and guidance. Thank you for blessing and success we have experienced, and help us to learn from the challenges we face. As we review our accomplishments and make plans for the future, grant us wisdom, discernment, and shared vision. May our decisions be productive, our decisions be wise, and our actions be guided by integrity and commitment to serving others. Bless our leadership, our staff, our members, and may we work together in harmony to achieve our goals. Amen.
Thank you, Mr. Skyers. I'm going to invite the Derrimon Choir to come forward. Derrimon Choir was formed recently, and they have been performing at several company events. Oh, they're in place already, my apologies. At several company events. So I'm going to ask you all to stand as they lead us in the national anthem. Please stand. Thank you, Derrimon Choir. Could you please give them a round of applause? We have a lot of talent in the company. Of course, singing is one of them. They have tried hard to convince me to join the choir, but I'm more of a soloist. I'm not quite sure if I will um, grace this year's annual general meeting with my singing talent. In fact, I'm going to spare you that today. So thank you, Derrimon Choir. I'm Derek Cottrell, Chairman and Chief Executive Officer of Derrimon Trading, and I'd like to take the opportunity to introduce the rest of the board members. To the immediate right and closest to me is Mr. Ian Kelly. Next to him is Mrs. Monique Cottrell, Mrs. Tanya Waldram Gooden, and Mr. Winston Thomas. On his way is Mr. Paul Buchanan, who has gotten caught in the traffic. And absent so far are Stephen Philibert, Howard Mitchell, who is unavoidably off the island, and Mr. Earl Richards, who is also off the island. And that's the full list of our board members. I'm sorry, and Alexander Williams is joining us by Zoom, I think. He is in the UK, so he cannot be present with us. He is the High Commissioner to the UK, but he still serves as director of this company. May I ask the registrar, are there any proxies received? Any proxies? There are no proxies, so we'll continue to move forward. I can confirm that at least 3 shareholders are present personally in this meeting, so that's the requirement of our Articles of Association. Therefore, I declare that the meeting has a quorum and the meeting is open for business. Let me take the opportunity also to recognize, I see a few faces here that I've seen at every single annual general meeting. Let me thank you for your loyalty and your interest in the company. And we want to welcome, I see at least one customer here, and there may be a few others, so we just want to welcome our customers. And of course, most of you are consumers, so you'll shop at Sampars also. So we want to welcome our customers, shareholders, friends, well-wishers, the press. Welcome to our 11th annual general meeting. The notice calling the meeting has been in the hands of the members of the company for the prescribed period set out in the articles. And with your consent, I will take it as being read. Is that agreed? Yes, okay. Thank you. Since there are no objections, we shall take note the notice has been read and we will move forward with the meeting. Annual reports to the shareholders. I'm going to call on Director Gooden to read the director's report.
Morning, shareholders, fellow shareholders, board of directors. The director's report. The board of directors is pleased to report to its shareholders on the performance of Derrimon Trading Company Limited Group Consolidated. The report reflects the results of the implementation of many group strategies and policies whilst navigating challenges encountered during this reporting period. As a board, we are very satisfied that the diversification strategies employed continue to provide the balance required to yield the best possible results for our shareholders. The directors who are retiring from office by rotation pursuant to Articles 97-99 of the company's Articles of Incorporation are Ian Kelly, Monique Cottrell, Winston Thomas, and Paul Buchanan, being eligible offer themselves for re-election. Auditors. The auditors of the company remain Baker Tilly of 11 Cargill Avenue, Kingston 5, Jamaica, and continues to provide the desired service. The directors continue to have their confidence and recommend their reappointment. We wish to extend our special thanks to all shareholders and bondholders for the confidence you continue to express in Derrimon Trading Limited. We look forward to a mutually rewarding relationship for the coming year and beyond. We acknowledge and extend our appreciation to our members of staff for their commitment, their committed efforts, and diligent work. We thank our customers, suppliers, consumers, and all other stakeholders for all their continued support. On behalf of the board, Derek Cottrell, Chairman and Chief Executive Officer. There are tables on the director's report. Our operating results, 18.7 billion in revenue, 166.2 million profit before taxation. Taxation was 15.7 million, and the net profit 181.98 million. Oh, sorry. Dividends. No dividends was paid during the year. The directors of the company as at December 31st, 2023 are Derek Cottrell, Chairman and Chief Executive Officer, Ian Kelly, Executive Director and Group CFO, Monique Cottrell, Executive Director, Company Secretary, Earl A. Richards, Non-Executive Director, Winston Thomas, Non-Executive Director, Alexander Williams, Non-Executive Director, Paul Buchanan, Non-Executive Director, myself, Tanya Waldron Gooden, Non-Executive Director, Howard Michelle, Non-Executive Director, Stephen Philibert, Non-Executive Director. The mentor of the company continues to be, once again, myself, Tanya Waldron Gooden. That's it. Over to you, Chairman.
Thank you, Mrs. Waldron Gooden. We'll move on to a presentation which will be led by myself and Mr. Kelly, highlighting all the nice stuff that's happening in the company. Are we ready with the presentation? I'm trying to see what you see. Is there more screens? Oh, company highlights. Could you put it over here too, please? Could you put it on this monitor also? Put it on this monitor also, please. Can we? If you can't, I'll work with it. Okay, you can't. No problem. So I'll have to test my long distance vision. I'll also bring it closer to me on my phone. So give me 1 second. It's right here. Okay. Let me also welcome those who came in a little late. I understand that the traffic is very bad, so we forgive you for being late. You haven't missed much, apart from the great rendition of the national anthem from our Derrimon choir. So some highlights for the company. The company, as I stated before, is 25 years old, and we have gone through a dramatic transformation from where we started 25 years ago, where it was a one-man business, to now we have over 1,000 employees, several different businesses, and we operate not just in one jurisdiction, but we operate in Jamaica and also the United States of America. So I want to commend every single team member for the incredible contribution that each and every person has made to transform this company over the last 25 years to be a significant player in our landscape here in Jamaica. So I want you to help me to congratulate the members of staff. I also want to thank the shareholders for their continued confidence in us and putting your money in the company, and it's our job to work it for you. So we want to continue to thank you there. So some of the highlights. As you can see, we were founded in 1998. In 2006, we launched the cold storage division. But before that, we we got into one of the major commodities that we're still in, and we're not leaving a commodity that is rice. 2006, we started a relationship with some Guyanese on rice, and it is still a nice, flourishing relationship with Guyanese and Surinamese, very good regional integration, and we have had excellent relationships. A lot of you may not know, but we are one of the main stay for that staple in Jamaica. And the truth is, if we are out of rice, Jamaica is out of rice. So we have a responsibility as a company to ensure that we supply the Jamaican market with rice. Further highlights, in 2009, we acquired Sampar's Cash and Carry, the one at Marcus Garvey Drive, and we have subsequently grown that wholesale retail division to 8 stores locally, and we are going to be having a 9th one in New York, a 9th and 10th in New York. We're rebranding that store in New York to be Sampar's also. 2013 was the official launch of our Delect brand. It was also the year we got listed on the Jamaica Stock Exchange. 2014, we acquired gem of a company, Caribbean Flavor and Fragrances. 2018, we acquired Woodcats. 2021, we took over Food Saver, which is now going to be Sampar's New York. 2021 also, actually 2022, we took over Arosa Limited in St. Ann. That's also a very good company that we acquired there, and you'll be seeing a lot of Arosa in the next 3 to 4 years as we work to transform that company. In 2021, we relocated our distribution facility to a very modern facility, one of the most modern distribution facility in Jamaica. It's located out at Ferry Pen. We took over 105,000 square feet. And so we wanted to ensure that we had room for expansion, and expanding we are. In 2022, we also acquired Spice Hill Farms, and we opened Select Grocers in Maypen. As you can see, we did quite a lot in 2022. We also reinvigorated our Delect brand and add some line extensions, and you'll get a lot of samples of the products today. Not necessarily to take home, but to taste. And as you can see, December 2023 was the official 25th anniversary by date, but we started to trade in 1999, so we are celebrating the 25th anniversary this year, 2024. So we are 25 years old. So that's just some of the highlights of the company. I'm happy to report that your company, Derrimon Trading, by assets is the largest company on the Jamaica Stock Exchange, and we are looking to continue to grow. So we will, not that we're in a competition, but we're just noting what the facts are. We're also looking to grow the top line as we continue to expand the business. This is our 10th full, well, it's going to be our 11th full year on the market. We started in 2003. This is going to be our 11th year. 2013, rather. And over the years, we have transformed the company into what it is now, which is a manufacturing, distribution company, and a retail company. And I want to break down manufacturing in 2 parts. The manufacturing arm of the company, we started off with Caribbean Flavors and Fragrances. So Caribbean Flavors and Fragrances and Woodcat are suppliers to manufacturers. They supply to manufacturers and distributors. So they don't necessarily make consumer goods in the main. There are a few consumer goods that are made by Woodcats and CFF, but their primary business is to supply manufacturers. So we are suppliers of manufacturers. We are also a manufacturing company. When we bought Spice Hill and Arosa, we got deeper into manufacturing, and these companies manufacture consumer goods. Spice Hill through Ram Goat Booster, the original Ram Goat Booster. If you want your curry goat to be properly taste like Ram Goat, you have to buy the Ram It Up. And if you want your managed water to be fully managed, you have to buy the managed water soup. There's a whole line of extensions of the range that is coming out. Spicy will be launching later this year. We also have a natural chicken noodle soup on the market. It's the only chicken noodle soup that doesn't have anything artificial in it. It is natural chicken meat, natural pumpkin, natural everything. Even the coloring is natural. It's the only natural product in that category on the market. And that is significant because we want Jamaicans to continue to eat healthy. And so if we are going to be promoters of healthy eating, we have to ensure that the ingredients that we put in our products are good for you. So that is the spice seal soup. In fact, all the spice seal products are all natural because the ram it up, all natural. The managed water soup is all natural. So that's one of the things that you'll know for a spice seal. Once it's a spice seal product, it's going to be all natural. It is not just tasty, but also very good for you. Not just good, but very good. So that's one of the selling points that you as shareholders need to tell the consumers. Why spice seal? Because it is wonderful, wonderful. You can all give yourself a round of applause. You're listening. In addition to the, those are the two major consumer manufacturing plants that we have, and we are going to be opening more. Those announcements will be made sooner rather than later. In fact, we have another announcement to make in terms of that later on this year. So we look forward to that. The company is growing. Then we do distribution. We have an island-wide distribution here in Jamaica that we go from Morant Bay to Negril Point, and we service through Derrimon Distribution and Arosa, both the food service channels and the traditional supermarket and wholesale channels. Also through Sampars, we do quite a bit of the small shops, gas convenience stores, cook shops, etc. So we are, in our ecosystem, we pretty much cover all the small shops, all the retail grocery outlets in Jamaica, and also the food service channel. We continue to deepen our penetration in these markets. There's a 3-year plan to take us to pretty much every single one of these stores. We have already begun to lay the foundation for that. We have recruited the main architects for that, and the plan is being implemented as we speak. We're also in retail through the Sampars and Select Grocers brand. Select Grocers Maypen continue to be not just the prettiest supermarket, but the best shopping experience you can have. And we have more stuff to put in Select Maypen. Select Manor Park is our other Select Grocer store. We have 2 other supermarkets, one in Crossroads and one in Old Harbour under the Sampars brand. We have 4 wholesales located at Marcus Garvey Drive, West Street downtown, Boulevard in Kingston, and St. Anne's Bay. St. Anne's Bay is going through a nice transformation, and we promise the consumers that you'll get a better shopping experience and more value from that location as we're putting some more emphasis in our St. Anne's Bay location. We also, of course, as I mentioned before, have what's going to be rebranded as the latest Sampars outlet, which is Sampars New York. It's going to be supermarket and wholesale for Caribbean and African products. That is being rebranded as we speak and will be reopened later on this year. So that's pretty much the ecosystem of Derrimon trading. I kind of spoke to the reorganization of those companies already. So let's look at some activities that we have for the past year in a pictorial. And I'm also going to carry through a little video journey of some exciting things that we have been doing and have done for this year. Some of the stuff that you maybe, if you're following our social media, you'll have seen some of it. But I know not everybody gets a chance to follow our social media. So we're going to present it to you as shareholders today. Georgia, what's the hashtag for the... see, I'm dating myself. It's not Twitter. It's our X. It's what's our Instagram page? Delec Foods. At Delec Foods is our Instagram page. Refresh your thirst. And Derrimon Trading. We have Spicy Ale also. Arosa. Caribbean Flavors and Woodcast. So they're all Instagram page. I guess they are similar for Facebook. My apologies, I'm not. I'm told that I'm too young to do the Facebook thing. It's for the older social media followers. I don't fall into that category. I'm still among the youngsters. Barely past the millennial stage. Barely. I see you don't believe me. Okay, so we're going to show a few videos to highlight some of the stuff that we have been doing, so you can feel very proud of your company that you're all owners of. So go ahead, Georgia. You'll notice that there was an award that we were displaying. The company won an award from the Jamaica Observer. It's a Lifetime Achievement Award. So you can applaud Derrimon Trading for that.
Hi, we're here in Treasure Beach, and Derrimon decided to participate in the giving back to the community because we've seen what the hurricane did to the communities in St. Elizabeth and the surrounding areas, South St. Elizabeth, and in this particular area. And we are intrigued because when we come and what we see compared to what we've heard, it's just so heartrending to see the posts now ceasing on the side of the road, to see the light wires, electricity wires, all down. Every other pole is down. The upcoming months are going to be tough for St. Elizabeth, and so Derrimon, as a part of our family and our customers in this area, we decided to just come out and show the people that we love you, and whatever it is that we're offering as a distribution company does not take away from us giving back to community.
So when the hurricane hit, we were the first down there. We were down there on a Saturday to see how we could help. So you're seeing some footage of that. And we haven't left the community. Continue. You'll see more. Okay. So in addition to that, we
came down today to give a little love to
go
the
ahead.
people of St. Elizabeth. It has been a rough period for them. A lot of them have lost their houses. A lot of them have lost hope. And we're here to help to show them that Jamaica cares, and we at Derrimon Trading care about. So we bought some care packages, we bought some soup, some spicy soup, to warm up their stomachs and warm up their hearts, and to bring a little love and cheer to them. And it has really worked. It has been a challenging day. We lost 2 tires. It has been raining, but we loved it, and the people have appreciated it. And we really, really love being down here in St. Elizabeth, right?
Better must come one day. Better must come. They can't conquer me. Better must come, yeah.
We started a very close relationship with the parish of St. Elizabeth earlier on this year through the cross country. We went there about, it was the first stop on the cross country, and we were there for about 3-4 weeks. So we have a relationship with the community. So, we are not fair with our friends. St. Elizabeth got hit badly by the hurricane, and like I said, we were there. The hurricane hit the Wednesday or the Thursday. We were there the Saturday. And we went back the following Saturday, and we have not left that community. You're going to see something else on that. But we haven't left that community because it was not just about the, what they can do for us, but what we can do for them. And our initiative, the initiative of the elect team and the full Derrimon team was well appreciated by the residents of St. Elizabeth. You're going to see some other stuff that we do. Continue.
I'm so thankful. And may God continue to bless you in everything you do. I can never forget you people. Never, as long as I live.
You know, it takes one hand to wash the other. If you should see your brother falling, lend an helping hand.
I want to say a big thank you to Woodcat and Mr. Kelly as well for helping me. I'm so thankful and grateful. I'm so grateful. I don't have words to say thanks. May God bless you all.
Today, Derrimon Woodcat team journeyed to South St. Elizabeth to deliver building material and care packages to 2 residents that were promised based on previous visit. So we had promised, and we are today honoring another leg of our promise.
I want to say thanks to Woodcat for their donation and the renovation of my roof. Thank you all.
See your brother falling, helping if you can.
Yes. Those families lost their roof, and whilst we have some expertise, Woodcats, like I said, the motto says more than just pallets. So we looked and see how we could help, and so Woodcats donated the material, and let me commend the community to have come on board, and they did a lot of the labor to ensure that the roof was completed in 2 days. So we did 2 roofs down there, and we gave away about over 1,000 care packages to the residents down there. So you're seeing the before and the after. That's it? Yes, thank you. So we just want to share that little pictorial as to some of the activities that the company has been undertaking. I'm going to hand over to Mr. Kelly, who will do the financial highlights for 2023 and talk a little bit about 2024. Thank you.
Thank you, Chairman. Good morning again, shareholders. It's good to see so many of the usual faces. And it's also good to see new faces this morning, which speaks to the fact that, one, you still believe in better, and you continue to live the dream that was started by our chairman 25 years ago. I also want to thank my colleagues for really putting in a lot of work during the past financial year that we'll be reporting on. It was a tough year. It was a year where if many things that we thought could not have gone wrong, went wrong. But I think as a company that is built on being resilient, and a company that knows how to pivot and how to chart new path, we would have been able to deliver the result that we would have published a few months ago. The fact of the matter is that risk management play a very pivotal role in the DNA of this organization. And as a result of that, when we listed on the stock exchange in 2013, December, it was one company, Derrimon Trading. It was a distribution company with one retail store. And you would have seen the evolution, which speaks to the fact that everything cannot go wrong at the same time. And given how diversified we are, we will be in a position to at least move and weather the storm. Last year was a year when we went through many, many reorganization. Because if you continue to not innovate, then certainly you would not be able to survive the test of times. You'd have noticed we would have increased our asset base last year to a record level of 16.68 billion. And that asset base was also recognized on the junior market of the Jamaica Stock Exchange, given what we would have achieved. Our revenue, we would have moved up to about $18.7 billion. And that was achieved notwithstanding the fact that we had many challenges. We went through major reorganization of our distribution portfolio in 2023. We would have taken the decision with Nestle to sever that relationship, which was about a 20-year relationship, Chairman. That relationship in its 8 days would have given us about $1.8 to $2 billion in revenue on an annual basis. But the fact is, our mantra is not only about growing the top line, it is about a partnership approach. And if we are not able to do business activities profitable, then we are going to do the necessary to ensure that we move beyond that. And that is one of the reasons why we would have moved beyond that 20-year relationship. Our net profit last year shrunk year over year, but it's explainable. Our business in New York, we also went through a major restructuring. And as a result of that, many different internal changes were done. Many different actions were taken in order to reorganize the business internally and to make the business much more profitable and to achieve the objective that we would have set out to achieve. The fact of the matter is that within the diaspora and within the Caribbean community, and based on the business that we would have bought, after 2 years, we would have recognized that there was a need for some internal changes to 1, people, 2, process, 3, products, and as a result of that, that business was literally reduced in terms of the top line in order to get bigger. Unfortunately, within the first quarter of this year, when we were ready to roll, Chairman, we had a major disaster in New York. But we always look at the opportunities out of every situation. And I think we can report that whilst not earning 1 penny within that business between March 22nd to to this day, we will be reopening the business within the next 2 weeks. And I think we'll be reopening, I know that we'll be reopening that business much bigger, much better, much more profitable. And also, our ability to do some of the necessaries in terms of people management, technology management, product diversification, we will be in a better place to do that. And we are certain that given the experiences of the last 2 years, we will achieve those objectives. So year over year, our revenue grew by 2%. We have seen tremendous growth within some of our business. Despite losing that 1.8 to 2 billion business within the distribution center, our distribution business, or Derrimon distribution, which is Derrimon distribution and retail, grew by about 11% in 2023. Our Caribbean flavors, which we'll be reporting on later this afternoon, also grew. Woodcats International grew last year, both revenue and profitability, likewise CFF. And certainly, our newest acquisition, Arosa, has undergone tremendous changes, and we know what we will require to do in terms of the retooling in order to achieve the objectives and the potential that that business is capable of doing. Our 5-year growth in revenue, despite losing or shrinking the New York business by about 15 million US in 2023, we would have gone about 48% in a year within the past 5 years. Importantly, when we dissect our different markets, what is important for us is, one, we need to attract the best talent in order to grow the business. And if you look at my colleagues on to the left, you would have seen many new faces that you wouldn't have seen in the last 2 or 3 years. We have Mrs. Strawn leading us in the marketing and brand building. We have Oral Richards leading us in the purchasing. We have Sheldon Simpson, who is the man who is managing the cost. We have Ricardo Skyers, who is channeling our Refresh brand. And then we would have seen all the other, Peter from Woodcats, Otima, our group controller, Stuart Jacobs, our general manager for Arosa, and our newest acquisition, Andrew Bent, who is the head of sales for the group. So what we're doing is that we are equipping the company in order to ensure that the budgets that we set will drive the desired result, so that I know what you want, and I know we'll get there. I know what you want and what we must return to our shareholders. You'll see that benefit in the short run. Our revenue grew year over year. Our gross profit continued to grow year over year. And we, despite the changes in the expense profile of the company, you would have noticed that we still maintain a level of profitability. Last year was unique in terms of our year-over-year profitability. And our expenses many of our expenses were normalized. I know my accounting partner from Baker Tilly is here. We are always in a fight over how we treat rights of use and accounting for leases. because we still feel that that's something that the accounting geniuses need to look back at in order to really see the impact that it is having on the presentation of the financial statements. But last year we saw insurance costs increase. The last 2 years insurance has been extremely high. Reinsurance within Jamaica on a whole has been extremely high. The group insurance would have gone up even after we would have gone through severe levels of negotiation, would have gone up about $58 million last year, year over year. Our rights of use based on leases and improvement in leases and full year impact of our Mapen facility would have moved up by about $58 million. Our staff costs across the group, attracting new talents, salary increases, increasing the number of new business coming on board year over year would have moved up by about $200 million. Security costs last year would have moved by $48 million. Utilities, $40 million. Finance costs, $120 million. So when you look at the normalization of many of these costs, you'd have understood what transpired in terms of the bottom line that would have reported this year. Mapen lease was the full year impact. The distribution center lease would have increased. Marcus Garvey Drive facility lease would have been increased. Leases would have increased. Marnock LLC and retail would have had annual lease. So what is important for us within Derrimon is that, one, we see opportunities. Two, we capitalize on those opportunities. We retool, we reevaluate, and then we extract value. I think we are where we are because we would have been looking at all of those pivotal points, and we are at this point moving in the direction that we are extracting the value that we want to extract for our company. And surely there are many sweet spots within the group, and we intend to continue to put the necessary resources, people, technology, etc., behind those sweet spots, because we know for sure what that outcome should be, given the, notwithstanding the toughness of the economy, but we know that coordinating all of those activities will help us to achieve the outcome that we must achieve. We'll move on to the net profit. Yeah, spoke to that already. All right, many of the key highlights for this year you would have noticed. One, we would have achieved a 16.6 billion total assets. You would have seen where gross profit would have been. You would have noticed that we would have achieved major growth in our capitalization over the last few years. We're still one of the largest, still the largest company on the junior market. And whilst we celebrate our 25th anniversary, we are at that point and that place whereby we will see major improvements as we tweak the various subsidiary outcomes over the next few years. Q2, we were moving in the directions that we think we ought to have been going. The first quarter was really a tough quarter for business generally in Jamaica. It was really a tough quarter. When you look back at most of the companies that would have most of the listed companies, you would see what the performances are based on the reports that were published. Importantly, we continue to put in the work. We continue to put in the work. For the second quarter, we would have seen major turnaround in the business. And the turnaround was without 35% of business, of revenue and profitability that is usually generated from our New York subsidiary. The uniqueness of our New York subsidiary is that, one, whilst it is catering to the Caribbean and the Caribbean diaspora and the Africans from within the New York and the tri-state area, it also acts as one of the channels for distributing some of our direct products, most of our direct products. Unfortunately, the landlord was doing some work on the roof. There was a storm, and there was windstorm and rain, and the rest, as they say, was history. We are going through, based on the devastation, the business had to be closed. And that took some time, based on, you would have recognized, requires permits, etc., to get back things together. Thankfully, we're at that point. And after these two AGMs today, I'll be heading up to New York to do my 1 week stint. Then the chairman would relieve me at the end of the week, because we are unbent in piloting the process to ensure that come October, we are ready for business and be ready to capitalize on what is coming up for the rest of the year, the big season in the U.S. The report shows where we are in terms of our revenue, $4.2 billion, as against we're down 7%, and that 7% doesn't include New York. And GP would have been about 1.1 billion, 2% down. And again, our EBITDA went up 64 million. Our net profit was down from 146 comparative year to 62 million for the first half of the year. And we see the impact. What is important is that we continue to see improvement in specific areas of the business. Our distribution segment of the business, which is distribution and retail, we have seen improvement in the first quarter. Our wholesale segment would have seen a 20% improvement quarter over quarter or year over year for a similar period. However, other segments of the business, which is the New York business, would have declined, declined by 51%. So even with the contribution coming from that segment being reduced, we are still seeing the levels of growth. We would have gone through the full diagnostics of what is required for different subsidiaries. And one of the challenges we have in one of our subsidiaries is a capacity challenge. And as a result of that, we'll be spending some money in the retooling of AROSA so that we'll be able to satisfy the demands that is expected from that we are continuing to receive from that subsidiary.
May I get your head back and it's not good for videography. Yeah?
All right.
You can see from away as well.
All right. Truthfully, as we normally speak, this year will be a tough year for the company. But what we will be doing, or we continue to do, is that we continue to manage our costs. We continue to ensure that the team is being agile and that the team continues to be very, very effective within the market space. We are unbent that we are pushing the manufacturing segment of the business because there is a deep correlation between the manufacturing segment and the distribution segment. Or many of our direct products are being manufactured by some some of our subsidiaries, and we intend to be increasing the capacities in many of those subsidiaries so that the value chain in terms of profitability is maintained within the group. A lot of focus is being placed on Dilect, and we are seeing the traction. A lot of focus is being placed on Refresh. We are seeing the acceptance of the brands within the market, and we continue to expect the outcome from these new initiatives. Surely, it is always not there are times that, we would have gone through different reorganization and transformation. And I think based on what we are doing, or we continue to do, is to reorganize, is to transform, and is to ensure that we position ourselves so that the value that the company intends to extract, that we'll do it. I think we have the right team, and I think we have the right vision, and we have the right strategy, and we will continue to implement them so that the financial rewards will be achieved for you all. Thank you.
Thank you, Mr. Kelly. We're going to move on to the auditor's statement. I'm going to invite Mr. Wayne Strawn, yes, to join us here. He will read the auditor's report. Mr. Strawn. And you'll note he has walked up with his bottle of refresh. Yes, 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 yes. He's going to need it.
Okay, good morning, everyone. Chairman, directors, shareholders, good morning. My name is Wayne Strawn. I'm the partner in the firm Baker Tilly. I'm here to present the auditor's opinion. And bear with me, it's about 9 pages long. The ICAJ insists that we must read this report in its entirety. So bear with me for the next few minutes. Independent Auditor's Report. To the members of Derrimon Trading Company Limited, report on the audit of the consolidated and standalone financial statements. Our opinion. In our opinion, the consolidated financial statements and standalone financial statements give a true and fair view of the consolidated financial position of Derrimon Trading Company Limited, the company, and its subsidiaries, together the group, and the standalone financial position of the company as at the 31st of December 2023, and of their consolidated and standalone financial performance and their consolidated and standalone cash flows for the year then ended in accordance with International Financial Reporting Standards, IFRS, and comply with the requirements of the Jamaican Companies Act. We have audited Derrimon Trading Company Limited consolidated and standalone financial statements comprise the consolidated statement of financial position as at 31st December 2023, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flows for the year then ended, the company statement of financial position as at the 31st December 2023, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flows for the year then ended, and the notes to the financial statements, which include a summary of significant accounting policies. Basis of opinion, for opinion. We conducted our audit in accordance with international standards on auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibility for the audit of the consolidated and standalone financial statement section of our report. We believe that the audit opinion we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with International Ethics Standard Board for Accountants Code of Ethics for Professional Accountant, IESBA code. We have fulfilled our other ethical responsibilities in accordance with the IESBA code. Our audit approach. Audit scope. As part of designing our audit, we determined materiality and assess the risk of material misstatements in the consolidated and standalone financial statements. In particular, we considered where management made subjective judgments, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all of our audits, we also address the risk of management override in internal controls, including, among other matters, consideration of whether there are evidence of bias that represent a risk of material misstatements due to fraud. How we tailored our group audit scope. We tailored the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and controls, and the industry in which the group operates. Our 2023 audit was planned and executed having regard to the fact that the operations of the group remain largely unchanged from the prior year. The group's businesses are organized in three primary segments, being distribution, wholesale, retail, and other operations. These entities maintain their own accounting records and report to the group through the completion of consolidation packages. In establishing our overall group audit structure and plan, we determined the type of work that was needed to be performed at the component by the group engagement team and component auditors. Key audit matters. Key audit matters are those matters that are, in our professional judgment, were of most significant in our audit of the consolidated and standalone financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statements as a whole. And in performing our opinion thereon, and we do not provide a separate opinion on these matters. And I'm going to go through some of the key audit matters. We refer to Note 2B and Note 7 of the consolidated and standalone financial statements for disclosure of related and accounting policies and balances. The total carrying value of goodwill as at the 31st of December 2023 is 1.43 billion, and the prior year is the same. This represents 8.6%, and for the prior year, 9.3% of the group's total assets. In accordance with ISA 36, impairment of assets, management perform an annual impairment assessment to determine whether the carrying value exceeded the recoverable amount of the cash generating unit, CGU, to which a goodwill is allocated and is therefore impaired at the reporting date. Goodwill relating to the recoverable amount of the CGU is calculated as the higher of the value in use and the fair value less any cost of disposal. Management determined the recoverable amount by reference to value in use, which is based on discounted cash flow projections, over which management makes significant judgments on key inputs. As a result of the assessment, management determined that there are no impairment as at the 31st December 2023. We focused on this area as an annual impairment assessment requires management judgment and estimates, particularly in relation to the estimates of future cash flows from the business, taking into consideration the key assumptions being the revenue growth, capital expenditure, discount rate in which a group impairment model. All right, so how our audit addressed these key audit matters? Our approach to addressing this matter with the assistance of our valuation expert, we performed the following procedures, among others: overall management goodwill impairment assessment as follows. And we start with 1, evaluated management future cash flow forecast and the process by which they are prepared, including testing the underlying calculation and comparing them to the latest financial forecasts. We also compared previous forecasts to actual results to assess the performance of the business and the accuracy of the forecasting. We challenged management key assumptions for revenue growth and discount rate. And in order to do this, we evaluated these assumptions with reference to valuation of similar companies. We also compared the key assumptions to external derived data where possible, including market expectations of investment returns and projected economic growth. We also evaluated the revenue growth, discount rate used in management cash flow projection. The result of our procedures indicated that management determination that goodwill was not impaired as at the reporting date was not unreasonable. Our next key audit matter is borrowings. We refer to Note 2P, Note 20, 22, and 23 of the financial statements for management disclosure of related accounting policies, judgment and estimates relating to borrowings. As at the 31st of December 2023, long-term and short-term borrowings, long-term loans, lease liabilities, bank overdraft represented 7.05 billion. And in 2023, this was 5.55 billion. This represents 52%, and in the previous year, 48% of the total equity and debt of the group. The group continues to be highly leveraged. So how our audit address the key audit matters? The parent company remained highly leveraged as management continued to strategically use debt financing as a principal pillar to implement structured growth projects within the group. During the year, management implemented strategies to improve its gross margin, thereby improving its cash flow and its ability to meet its financial obligations as they fall due. The parent company continues to examine its financial options within the context of its debt management strategy and review of its choices based on present improvement, market condition, as well as its risk profile. Our audit approach includes included. 1, we reviewed the loan agreement and repayment schedule. We noted that all the loans were being serviced on a timely manner basis and as per contractual agreement, principally by predetermined monthly deductions from the company's various bank accounts. We also confirmed the balances, reviewed the maturity schedule for the repayment, we tested the interest calculation, and they determined that the total borrowing represented obligations by the company and the group. We also tested the effectiveness of the controls over the timely repayment of loans and other credit facilities and noted that they are compliant with various agreements. We had robust discussions with senior management regarding the growth and the expansion strategy, using debt as the principal means of growth and expansion and the ultimate strategy to reduce the debt capital over the long term. A downside to this strategy is the inherent liquidity risk that the cash-generating unit acquired may not perform as expected, resulting in the company and the group being unable to meet its obligation as they fall due. Management is mindful of its inherent liquidity risk. However, management is confident that their strategic growth and expansion plan will continue to perform based on its historical performance and anticipated future positive trend due to its encouraging economic factors being experienced in the marketplace despite COVID-19 pandemic. Management is of the opinion that adequate safeguards are in place as they have implemented the necessary policies and procedures, including scenario analysis, alternative payment strategies in the event of a cash flow challenge, direct monitoring of the individual borrowing. We evaluated the performance of the borrowing portfolio subsequent to the end of the reporting period to determine whether there is any need for any adjustment or whether there is any default or breach in any of the terms of the financial covenant. There were no adverse findings. We also reviewed the legal and bank confirmation and correspondence, and we did not identify any negative matters or need for any adjustment at the time of approval or the signing of the audit opinion by the board of directors. Our next key audit matter referred to expected credit loss, and this is a very topical one in our accounting profession. The group recognized the expected credit losses, ECL, on financial assets, measured at amortized costs. The determination of the ECL is highly cost-subjective and requires management to make significant judgments and estimates and the application of forward-looking information. The combination of significant management estimates and judgment increases the risk that management estimates could be materially misstated. Our audit procedures in response to this matter included: 1, obtaining an understanding of the model used by management for the calculation of the expected credit losses on accounts receivables. We tested the completeness and accuracy of the data used in the model to the underlying accounting records. We involve our financial risk modeling specialists to review the ECL model, assess the appropriateness of the company's impairment methodology, management assumptions, and compliance with the new requirements of IFRS 9 financial instruments. We also assess the appropriateness of the group's impairment methodology, management assumptions, and compliance with the requirement of IFRS 9 financial instruments. We also assess the adequacy of the disclosure of the key assumptions and judgment, as well as the details of the transition adjustments for compliance with IFRS 9. We also test the accuracy of the group's aging of the accounts receivable, and we tested the accuracy of the ECL calculation. Other information. Chairman, may I have that bottle? Thank you, Chairman. Thank you. Other information. And we're getting there. Management is responsible for the other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statements and other auditors' report thereon, which is expected to be made available to us after the date of the auditor's report. Our opinion on the consolidated and standalone financial statement does not cover other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statements, or our knowledge obtained in the audit or otherwise appears to be materially misstatements. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statements. Management is responsible for the preparation of the consolidated and standalone financial statements that give a true and fair view in accordance with IFRS and with the requirements of the Jamaican Companies Act, and for such internal control as management determine is necessary to enable the preparation of consolidated and standalone financial statements that are free from material misstatements due to fraud or error. In preparing the consolidated and standalone financial statements, management is responsible for the assessing of the group and the company's ability to continue as a going concern, disclosing as applicable matters relating to going concern and using the going concern basis of accounting unless management either intend to liquidate the group or the company or to cease operation or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the company, the group, and the company financial reporting process. Auditors' responsibility for the audit of the consolidated and standalone financial statements. Our objective is to obtain reasonable assurance about whether the consolidated and standalone financial statements as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but it is not guaranteed that an audit conducted in accordance with the ISAs will always detect a material misstatement when it exists. Misstatements can arise from fraud or error and are considered as material if individually or in aggregate they could reasonably be expected to influence the economic decision of the users taken on the basis of those consolidated and standalone financial statements. As part of our audit in accordance with the ISAs, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risk of material misstatements of the consolidated and standalone financial statements, whether due to fraud or error, design and perform audit procedures responsive to those risks, and obtain audit evidence that is sufficient and appropriate to provide a basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal controls. We also obtain an understanding of internal control relevant to the audit in order to design audit procedures that are appropriate in the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company's internal controls. We also evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosure made by management. We also conclude on the appropriateness of management use of the going concern basis of accounting and based on audit evidence obtained, whether a material uncertainty exists relating to events or conditions that may cast doubt on the group or the company abilities to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our auditor's report to the related disclosure in the consolidated and standalone financial statements, or in such disclosure are inadequate to modify our audit opinion. Our conclusions are based on the audit evidence obtained up to the date of our auditor's report. However, future events or conditions may cause the group or the company to cease or to continue as a going concern. We also evaluate the overall presentation, structure, and content of the consolidated and standalone financial statements, including the disclosure and whether consolidated and standalone financial statements represent the underlying transactions and events in a manner that achieves fair presentation. We also obtain sufficient appropriate audit evidence regarding the financial information of the entities or business activities within the group to express an opinion on the consolidated and standalone financial statements. We are responsible for the direction, supervision, and the performance of the group audit. We remain solely responsible for the audit opinion. We communicate those charged with governance regarding, among other matters, the plan, scope, the timing of the audit, the significant audit findings, including any significant deficiencies in internal controls that we identify during the audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirements regarding independence and to communicate with them all relationships and other matters that may reasonably be thought to bear on our independence, and we, where applicable, related safeguards. From the matters communicated with those charged with governance, we determine those matters that are of most significance in the audit of the consolidated and standalone financial statements of the current period and are therefore the key audit matters. We describe these matters in our auditor's report unless law or regulation precludes public disclosure about the matter, or when, in extreme rare circumstances, we determine that the matter should not be communicated in our audit report, because the adverse consequences of doing so would reasonably be expected to outweigh the public interest benefit of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as appear from our examination of those records, and the accompanying consolidated and standalone financial statements are in agreement therewith and give the information required by the Jamaican Companies Act in the manner so required. The engagement partner on the audit resulting in this independent auditor's report is Wayne Strawn. Signed, Baker Tilly, Chartered Accountants, Kingston, Jamaica, 29 February 2024. Thank you. Chairman, thank you.
Yes. Thank you, Mr. Strawn. He deserves a medal. You have heard the financial report, the report from the auditors, and also the director's report. All three are open to questions, so I open the floor to questions. Simple rule, is there a microphone? Yes. State your name before you ask your question. Okay.
Yeah. Good morning, fellow shareholders, Mr. Chairman.
Yes.
Big up, everybody. I have three questions.
Remember
first,
your name?
Livingston Young.
Livingston Young.
Yes,
Thank
sir.
you, Mr. Young. Three questions.
Yeah. The first one is, if I come in there, I never taste the Maggi, the noodle soup or the son of beer. So, Spicy Hill.
Spicy
right.
Hill, right?
Spicy Hill, yeah.
Spicy Hill, right over there. Yeah,
Yeah, we
Spicy
never
Hill.
taste it. But I want to say not think hard as a Jamaican or for the business. You understand?
Yeah.
And ask, Mr. I've asked that for wisdom because I want to come up with a good idea. You understand? So big enough for that.
Thank
And
you.
next one with the African, could explain to we as a shareholder, the African things, explain a little on that for me, please.
Okay, let me take that one. In New York, we sell to both the Caribbean and African diaspora. There are some specific stuff that are unique to the African palate. Things like stockfish. It's basically a dried fish, which we don't really eat as Caribbean people. But the majority of the food that they eat, we are not unfamiliar with. For example, goat. They eat a lot of goat. The difference is their goat is skin on. We tend to take the skin off our goat. They eat chicken, they eat fish, they eat a lot of the stuff that we eat. Yes, beef. Not so much pork. We have a lot of Muslims in Africa. They eat a lot of beans also. Some of the beans we are not familiar with, but you know, that's part of it. A lot of what is also called African is really European products that they grew up with, like we say Milo, they say Milo. Horlicks. There's a canned sardine Titus that when I say Africans, I should say primarily Guyanese, Ghanaians and Nigerians, because as you know, there's many countries in Africa, but it's primarily East Africans that we cater to. So that's pretty much what we talk about when we say African market.
All right. As next one, as a supermarket, Derrimon traded. Could explain to you seafood products. Like, do you have rainforest and then what kind of like you have shrimps? What kind of seafood products do you guys put on rainforest doing Derrimon trading? Explain that to me.
Seafood.
Yeah.
Well, we don't do a lot of seafood in distribution companies, so we pretty much retail seafood. And most of the seafood you'll find in Jamaica is frozen because our local seafood industry, to give you fresh fish, isn't that organized, or we get the type of fish that we could sell. The pretty fresh fish that we sell in New York. In New York we sell mostly fresh fish on ice, but it's a different kind of industry. So the majority of seafood we sell here will be the different kind of fish, and also things like lobster, shrimp, scallops, that kind of stuff.
And like that's like sweet corn and all this things, because that supermarket chain.
Yeah, we'll Rainforest will be one of our suppliers along with others, and their distribution, Derrimon distribution, would also import some stuff.
Remember, you have to set the things that the customer come in, so you have to please the customer and say something, they like, if your product always have to look fresh in the supermarket, because it's a chain of supermarket.
Yes, sir.
You can turn to page 88 for me, please. Note 3D, liquid risk, company. You there, Mr. Chairman?
No, go ahead, man. Mr. Kelly more like will feel this
right,
one.
1 to 3 months, 3 to 12 months, 1 to 5
page
months.
88 you said, right?
Yeah, page 88, note 3D, liquid risk. B, yeah, B, right, B.
Page 88, 3B.
Yeah, that's right, liquid risk.
Yeah, go ahead.
1 to 3 months, 3 to 12 months, 1 to 5 months, over 5 years, over 5 years controlled. They could give an explanation on your losses and liability, long-term loans, payables, short-term loans, retail parties, bank overdraft. No.
That's above my pay grade, so Mr. Kelly will take that one.
Yeah.
All right. So based on the standard and the presentation of financial information, you're required to really look at your liabilities and when these liabilities mature based on different time buckets. So IFRS 16 requires leases to be broken down into, in previous time a lease is just a lease. Now you have to book a lease as a loan, and the tenure of the loan, the tenure of the lease is what dictates the time into which the contractual liabilities falls due. So every year, your lease liability based on the standard would have been amortized over different periods. So that's lease. Right? Understand?
Yeah.
All right. So loans now, when you borrow short term or long term. Each loan has a maturity period. Okay. And it is based on the maturity of your loan that they are being ranked into different buckets based on the cash flow and the balances that becomes due on the loan. Most of our loans...
They're most likely to borrow long term because you see your money more easy.
Well, our loans are being amortized.
Yeah.
We have a few loans that are bullet, meaning that if it's 5 years, at the end of the 5 years, we'll make the full payment of the principal, but would have been making the interest payment on either a monthly basis or a quarterly basis. Yeah. Which is one of the reasons why within the auditor's statement, he spoke to the fact that we are leveraged, but based on the review of the loans, the payments, and our bank statements, we have been making our payments on time and based on what we would have committed to.
Mr. Chairman, look at this. Really restated parties of 225,137. Give a little explanation, please.
Well, look at it like this. If you own your company and some have liquidity, why not borrow from your company?
Exactly.
And that's exactly what we do.
All right, Mr. Chairman. Thanks. Yeah.
I'm sorry, audience. That was 6 questions.
Yes. Next question. Next person. Yes, go ahead.
Good morning, everyone.
Good morning. Please state your name.
I am Daphne Drisdale, shareholder.
Daphne
Drisdale.
Drisdale. That name sounds familiar.
Yes.
Yes.
I'm giving a commendation here.
Mm-hmm.
The success of the business has been great, and I give you kudos for that. And to see that you were the first set of persons to reach out in the storm, so we can be a shelter in the time of storm with you, with the company.
Yes. Thank you. Thank you. Thank you. Thank you.
My question now, I see you doing a lot of acquisitions, and the latest one is the Arosa. What is that company about? What they entail?
Arosa is a meat processing business, so they do like hams, sausages, different kind of smoked meats.
Yeah.
It's also pepperoni, that kind of stuff. Okay. They also do wines and other products for the hotel and food service industry. So that's primarily what Arosa is.
Okay.
Located in St. Anne.
Thank you. Another thing is, with acquiring of that, was it you, the person who go to them, or they
came to us?
Yes, to do the
Good question. And I always answer truthfully. It's a little bit of both.
Okay.
They were reaching out looking to sell, and we were interested, and we went and sat with them, and after negotiation we decided to go forward with it.
Okay. Very well, thanks.
You're most welcome. Anybody else?
Good day, everybody. I am Leroy Dawkins, employee, Derrimon Trading Company Limited, and shareholder. Now, this is not a question, but this is a comment. It is important for us to support our own brands, right? The Refresh brand is our water brand, and I have to take the mic this morning because I have seen some persons, and don't feel guilty, I forgive you, some persons with the competition. Let me just remind you that every time you purchase somebody else's brand, you are competing against your own company. The Dilek brand is our brand. It's a food brand. And it's important for us, it's very imperative for us when we go in the supermarket, when we go into different places, the shops and so on, to look for our brand. It is called support for support. It makes no sense. The price is very competitive, very competitive. I'm telling you, it's value for money. So remember, the Refresh brand, you will see it at the stoplights, you will see it all over Jamaica. And if where you shop, they do not have our brands, tell them that they are not doing a very good business if they are not carrying the Derrimon brand. God bless you.
Thank you. You can see our team members are very passionate about their company and about their brand. And Oh, without question. That if it's not quality, we don't make it or sell it. So you can always be assured that we have the best quality products. We want our shareholders to be equally passionate about the brands that you own because you are owners of the company, so you're also owners of the brand. And I'm going to get a little bit controversial here, but I want to make this point. I think it's important to make it before I move on to the next question. Sometimes there's and the press is here, so I want to, don't put this part in the newspaper. 'Cause I don't want any controversy. It's very high, Jamaica not really full of a lot of controversies when it comes to this, but I'll say this to you. There are some communities that understand support. Unfortunately, Jamaicans and a lot of our other black countries don't quite understand it. It's how we are culturalized. So, for example, the Jews have a principle that the money has to circulate in their community 7 times before it goes out. They don't ask prices. They understand that the richer they make their community, the richer they are making themselves. Now, I understand it's a huge cultural change for us, but I'm not going to miss the opportunity to mention it. Let me give you a simple example. So let each of us have different, I know it's something we should probably look to do, and probably next year we'll see what we can do, because as our shareholders, we should be supporting your businesses too. So probably we should be asking you what businesses you are in so that the Derrimon money can spend with you as shareholders, right? For the businesses that you do, because as Mr. Dawkins said, it's support for support. But the major principle is if the money stays in the community. So I earn a salary of, let's say, $100,000, and I want a plumber. And this gentleman here is a plumber, and the plumber cost me $10,000, and I give him $10,000, right? I spend $10,000 out of my salary, and then he goes to a grocery store, Sampars, and it goes, that $10,000 stays in the community, and Sampars buy from this gentleman who is a farmer, and the money stays in the community, and so forth and so on. So that is how you build wealth as a community. For the people who are church people, that's something that churches should do too. But as a company, since we're bringing it here, that is something that we should do. But sometimes they watch the price and don't realize that the few little cents difference is really making us poorer. Because the money you spend back in the company will come back out as dividends and also capital gains. So I just want to say that, you know. Right? You see, we have one of my good friends is here, and he's one of our customers. And let me tell you about support. Steve owns National. National is not Sampar's competition. It's Sampar's friend. Because you talk about support. If we put out anything, Steve is the first one to buy it. Right? And he's going to spend his money back in Derrimon. He's a shareholder for Derrimon also. Right? So he understands the principle and the money circulates within the community. All right. Yes, next question.
Pleasant good morning, Lancel Bloomfield shareholder.
Yes, and before Mr. Bloomfield answer or ask his question, he has been to every single annual general meeting. So give him a round of applause.
Thank you, Mr. Chairman.
Yes.
Page 8.
Page 8. Yes.
In your 5.
Is something you think I can answer?
I think so, Mr. Chairman. Okay, all right. In your 5-year statistical review, in 2022, your revenue was 18.4 billion, and you made a profit of 617.6 million.
Okay.
In 2023, your revenue was 18.74 billion, and you made only a profit of 181.94 million.
Yeah.
Why is this significant drop
in profit?
In profit.
Yeah, okay, I can answer that one for sure. Okay, Mr. Kelly actually answered it already, but I will reiterate. One of the things about this company, no 2 years are ever alike. We have never had 2 years that we compare, that's the exact same. Although we haven't done any acquisitions yet in 2024, 2024 was different. It's going to be different from 2023 because New York has been closed for such a long period of time. Similarly, what happened in 2023 was that we had an acquisition, well, the full year of an acquisition, which was Maypen, the Maypen store. But we also had a scaling down of distribution. Mr. Kelly had mentioned that we had reduced the level of business that we were doing with Nestle, which was significant. That was over $1.2, $1.3 billion per annum. And so although the income remained the same, we had all the expenses from the store in Maypen, and so that was part of the reason that brought down our profit. There are several other reasons. Let me go through a few more of them. Another one was Mr. Kelly spoke about some realignment we did at the business in New York. We have to be constantly assessing risk. A significant part of the business in New York was a credit business to restaurants. And you know that Jamaicans are not always the best of paying bills. I'm just talking the truth. And not because they're in New York that they necessarily pay better. So we realized that there was a significant risk to the business with us continuing to give credit at the level we were to a lot of the restaurants. So we reduced a significant portion of the business from giving credit to turn it into a cash business. Obviously, that would have had some effect on you in the short term, but in the mid to long term, it works out a lot better. So when we cut off the credit, our sales went down, so that reduced the sales. Made us a little less profitable, but in the long, our cash flow improved, and before we closed, we're seeing the upswing already with customers who are coming in to buy cash. In addition to that, we had some unique expenditure for a unique cost for 2023. At the beginning of the year, we had a huge cost carrying over from 2022, which was goods on the port, because of the logistics issues coming from the pandemic. And it was not just Derrimon Trading. I know there are other companies that had similar problems. There was a carryover of an oversupply of goods on the ports. Some of them we couldn't just physically hold in our warehouse. Chilled warehouse, cold storage warehouse primarily. We have enough dry space. So we would have ordered like 3 or 4 containers of saltfish per month. Then 11 containers come at one time. Because it missed this, the shipment missed this boat, then it missed that boat, and then all of them come back to back. It resulted in some significant costs in demurrage and fees at the port, and that was not something we could have done anything about. It was totally out of our controls, and though we negotiated some reduction in costs, the fees were excessive, and that costed us over $100 million in those fees. So there were several reasons why our profitability was down for 2023. In addition to that also, interest costs went up significantly over the period. In fact, 2023 over 2022, interest rates almost doubled. We were borrowing at single digits primarily. Our interest rates were 5 and 6 and 7%. Interest rates are now 10, 11, 12, up to 14% sometimes, Mr. Kelly. Right, so it's a, let us say, as Mr. Kelly said, we had a perfect storm for 2023. A lot of bad things happened. So that was the reason for the significant reduction in profit, though the sales remain the same. It's security costs, so yes. As you know, when Mr. Kelly spoke to it, it was about $40 million. The government made a decision to increase the salaries to make the security guards work a 40-hour work week. And also, when the security companies eventually did everything, it meant that security costs was more than doubled. Right? We had to do some significant management to bring it at a level that didn't double our costs.
All right, accepted.
Thank you.
Mr. Chairman, page 54.
Page 54.
Retained earnings.
Retained earnings.
Mr. Chairman, you have a retained earnings of 2.33 billions.
Okay.
Therefore, why is it that you have not declared a dividend?
Yeah, man, I know you're coming with that. And you see, I'm on your side, you know. I actually am a shareholder too. Pretty significant one. All right, let me explain why we have not declared our dividends for 2023. Cash is king. And well, it's a good thing we didn't, to be frank with you, because what has happened in New York, which nobody expected, and we have not gotten an insurance payout yet, required cash. You pay dividends from excess cash. So we have retained earnings, but it's not necessarily in cash. As you see, we have significant increase in our inventory. What we're doing is to take you down our road. Just be patient with us. We're working to build the backbone of the company. We're moving from commodities to brands. A lot of the products that we buy, we have to be buying them 6 months in advance and paying for them up front. The one thing you don't want a company to run out of is cash. Okay? We're not yet a mature company like, and I'll call a name, like cigarette company, for example, that they pay cash every day. I mean, they are washed in cash. This company is a growing company, and we have to be very careful how we utilize the cash. Right? So are we going to pay dividends in the future? Yes. This shareholder definitely want dividends. But although the retainers are high, it's not a lot of it is in cash. And we want to put ourselves in a position where our debt become due and we having cash issues, or we can't buy goods to fill the stores, etc. So that's the reason why.
All right, accepted. And my last question. Mr. Chairman, page 117, note 20.
Long-term
loans.
117.
Note 20. Mr. Chairman, there are a raft of loans given to this company of various amounts.
Yes.
That are being repaid. Why is it that this company has taken out so many loans, of which is preventing the shareholders from receiving dividends?
All right. A lot of these loans some of them are for growth. So therefore, let me share with you. You'll see we have $16.8 billion worth of assets. Some of these assets, and let me give you a good one. We bought Woodcats, it's public knowledge, for under $400 million. Woodcats right now earn value multiples of that, right? So our strategy is very simple. We take loans primarily to do acquisitions and to grow the business. That will give you greater value in the mid to long term. So, like I said, we are not a company that is looking to just sit on our laurels and just stay at the level that we're at. We're looking to grow. So, with growth, you need investment. So, a lot of these loans are done in terms are used to facilitate investment. These investments are all going to pay off. Some have already begun to pay off, like Woodcats, Caribbean Flavors and Fragrances. Arosa is still fresh. You'll see that. We spoke about what's happening in Maypen. Maypen is going to be a monster project, and we're just settling it down now. That's going to do like 3-4 times what it's doing now. So just be patient, my brother. You'll see the loans come down. The loans, if you look at another schedule, you'll see that some of the loans are going to be expiring next year, the year after. I think the last one is 2027. Yeah, so the loans are being repaid and go down, but we decided to go this route to grow the business.
All right, thank you very much.
Okay, you're most welcome. Good questions.
Yeah, I may say this. We have a single policy within the company. We do not borrow to pay salaries, to pay utilities, and to deal with our operational expenses. If you look on all of our loans, you'll see what it is used for. In 2021, we did an APO, and you'd have noticed when we got the proceeds from the APO, and I just want to just clarify the point that we're making. We use $1 billion to buy a business in New York, just over $1 billion. We spent $2 billion to liquidate debt at that point in time, which speak to the fact that we are not ever about mounting the balance sheet with debt. In addition, our strategy whereby we look at a combination of bank loans because of the amortization effect, because most of that is being utilized for our working capital purposes. And then when we go to the capital market structure, that's where we use a combination of the balloon effect as against the combination of quarterly repayments. Sooner or later, you'll notice that many of these companies will do internal dividends, and those dividends will be utilized to make dividend to other shareholders or to liquidate the debt, so that in the short to medium term, you'll be able to pay handsome dividends over a foreseeable future.
Thank you.
Yeah, Mr. Chairman, when I got to stock exchange.
You're next?
Yeah, just one more.
Okay, all right, go ahead.
Yeah, Livingston Young again.
Yeah.
Derrimon traded was my first stocks I buy. Then after Caribbean Fever come on, them I buy. But back on the supermarket now. Me man come from country. I just work in supermarket. Your product like the Irish potato, this and that. Is Jamaica product or imported from foreign for come in this supermarket?
All right. Most of the Irish potato you see in our supermarkets is local. We have a very robust program. So I tell you, we're very strong in St. Elizabeth, because a lot of the fresh produce that we purchase come from St. Elizabeth. So we have strong suppliers in St. Elizabeth. We have deep roots in St. Elizabeth. Also, Mrs. Strawn, our head of marketing, is from St. Elizabeth. And she don't let us forget that, But yes, it's local. Jamaica is a unique country, particularly in the Caribbean. Most of our fresh produce is local.
The reason why I say that is, Mr. Chairman, because of the devaluation of the Jamaica dollar, you have to buy, some of my company buy things from foreign, which we can support our own country. If we do our supermarket things.
Well, we can commend the government for this. The government has fresh produce in particular. There's a regime that protects the local produce. There's a very high duty, and some products you need license to import it. Even though the duty is high, you still need license to import it.
Yeah. You can turn to page 90 for me, please.
90?
Yeah, 90.
Okay, it's the last question.
Yeah, note C, current risk.
Note 90, loan. Page 90.
Yeah, note C.
Note C.
Yeah. The group, 2023, this is in US and Euro. 2023 and 2022. You can explain to us as a shareholder, the US and Euro, revaluation and devaluation, Jamaican and US and Jamaica. Explain it to me from now. European, sorry, Europe. $1, 4%, 1%, 4%. It's in the group.
Yeah. You see, what is this showing is really the fact that many of our business not only do business in Jamaican dollars, we do business in different currencies. And based on the level of our bank accounts, or based on the level of the liabilities that we have with some of these suppliers, that the need requires for the settlement of these liabilities is in this currency. Based on the standard, we'll have to do a sensitivity analysis based on the trends and devaluation to see if there are any movement. This is the possible impact that it will have on the business.
Well, don't move, Mr. Chairman. This Europe money, when in like the devaluation, based upon the Jamaican dollar. Listen very carefully. Based upon the Jamaican weak, the value less than 3 cents. How do you make up? Explain. How do you make a profit in European?
No. We are not in the business of trading to make.
No, it's
a
not
profit.
trading. No, it's not. It's not that we are based upon. Remember, says that investment. You have the business. So it's the US and European money. Explain this as supermarket that we have other investment.
Remember, so like Caribbean flavors.
Yeah.
Caribbean flavors will have to buy goods from different countries.
Oh.
And from different suppliers, which requires the settlement in different currencies. So, what that means, it means that when you look at the movement in the euro to the Jamaican dollar, you have to put some risk weighting in order to do some sensitivities.
Yeah.
So it has nothing to do with the profitability.
Mr.
One thing I'll tell you, when we are doing our risk-based pricing, we take into account for pricing of our goods, movement in the currencies.
Yeah. Mr. Chairman, I mean, it's not accountancy, but as a shareholder, we have to think about invest in you guys' company, Derrimon China plus Caribbean Favors. We are very smart. We're not full Jamaican. So, all right, Mr. Chairman, thanks. Yeah.
I can attest to the fact that you're very smart, sir. Okay, final question.
Neville Graham from the Gleaner. Probably we'll need Mr. Kelly for this.
Mr. Graham.
Yes.
How are you?
Very good.
Wonderful.
Or I know for certainty that we have a benchmark that where we want to be or we want to maintain in terms of our debt to equity. But we would have moved into some new green pastures and some different business lines. One, building out a brand is never cheap. Never cheap. However, the results of building a brand is what we must achieve. Most companies that you're seeing over 100 years would have started out in the commodities business, and then they would have started with commodities, and then over time they would have built brand. And how did they go about doing it? Debt. What you recognize also that the world has changed in terms of suppliers' credit, because in the past you could probably get 90 days or 60 days credit. No, credit would have been reduced to 7 days, 14 days, 30 days. In order for us not to be getting in a business and not staying in that business, we have to ensure that we are always having the necessary amount of inventory. And how do we finance inventory? Suppliers' credit, cash from internally generated funds, or debt. And we have to at all times look at the mix and the balance whilst managing our abilities in order to achieve that objective. So, excellent question, however. We'll have to get within, be able to weave and to look within our model to see what is the best matrix.
I did say last question, but I won't deny you, sir. You are now the final question. Pardon me? No problem. I'll accept comments. Go ahead, sir.
Good afternoon, fellow shareholders. And
it's afternoon already?
Yes, it is.
Oh, my.
And the board. Mark Anthony Barton is the name. And the question is, growth in the company is appreciated, and that's the way forward. The brands that you have now had needs to be more aggressively placed in the space to bring in the revenue that we need. I am a frequent regular shopper at Sampar's. I've been for many years, and I have not given you up. Trust me on that one. If it's even to go in there and spend $5,000, I'll do so.
Appreciate it, sir.
Thank you very much. And some of your select products, especially your sea salt, I mean, I have been deliberately going around to the other supermarkets and roughing up the supervisors why it's not
Please
on
do
the
that.
shelves.
Yeah, man.
No, something I've done.
Yeah, man.
Because I even bring a few of them and show some supervisors, look here, this is the best sea salt, why you don't have it? You know? And I noticed that one of your competitors in Crossroads has now placed it on the shelf. And I buy it there deliberately just to show them that I'm supporting the brand.
Thank you, sir.
Again, I would like to see more of the Delect products in other supermarkets.
Yes.
Especially north of Crossroads.
Okay. I know exactly what you're talking about.
Definitely,
So
yeah.
we're working on it.
Yeah, I know that. And just want to add my value to our debt issues here. Question, does the strategic plan moving forward to manage and mitigate the debt has any plans of raising any cash in terms of going back to the equity market? Read some of
Good
your
question.
acquisitions.
Good question.
Do
I
you
can
have
answer.
any?
Oh, go ahead. Finish.
Do you
the
have any
question.
ideas to maybe have any listings in the near future?
Okay.
Because Derrimon now will be moving across to the main market, and
Well, we don't have to move to the main market yet, but the equities market is not particularly good now. We wish it was better. And you really are going to segue into something I really is very passionate about. Costs in business is very managing your costs in business is one of the major things that you have to do as a businessman. And one of the major costs we have in Jamaica is the cost of money. Like I said, between 2021 and 2023, the cost of money more than doubled. It was not just a Jamaican phenomenon. Interest rates have gone up around the world, but there's a significant resistance to what's happening in the markets now. So I expect interest rates to go down. Unfortunately, I am not the one who determine it, but we expect interest rates to go down. And with that will help businesses significantly because we need to keep the cost down. The low enough interest rates will also signal the strengthening of the equities market. So when that day come and the conditions are right, it's something we'll consider. Yes.
all right, thank you for that.
Good day, everyone. I am a shareholder. I think I bought these shares some time ago, but this is the first time I'm coming to one of your AGM.
Yeah.
And I must say, I like the feel. I like what I'm hearing. And I think this company has a great future. And I would like to thank the management of the route that they are taking. Although the share price has fallen from what I bought it from, I hope to see some changes in the market.
Yes.
With terms of the price of the stocks, because we watch that.
Right.
But keep going, and I don't necessarily have bought your products. I don't really know, but I
Well,
will
you're going to know them today.
and taste them too.
Yes, some of them for sure. Yes, we always have tasting.
All right,
think,
so I want to commend the management of this company, and I feel good.
Thank you.
Yeah, and I think I'm considering buying a little more stocks, but
Yes.
I not.
Especially since the price is low now.
Yeah, it has
Yes.
fallen from what I bought it,
Yeah.
but that is what is the trend on the market.
Yeah, that's almost every share. I don't think there's one price on one stock on the stock exchange that has gone up.
So that is expected,
Yeah.
and I hope that but you said the market is not so good now. But keep doing what you're doing.
Thank you.
And growing what you're growing, and I like the feel. That's all I can say.
All right, thank you.
Yeah,
I
kudos
appreciate
to
it.
you.
Okay, thank you. Okay, so, pardon me? Okay, that's one of the few. And I told you why. Gentlefolks, I want to thank you again for attending this. This is a well-attended AGM. I think it was a very nice day that we have spent so far. We want to thank you all for coming out today. We appreciate each and every single shareholder. We try to keep our things as tight as possible, but give you opportunities to ask questions and be as transparent as is possible. So we want to thank you again for attending today, and I want to... Oh, my Lord. I'm forgetting the last part of the agenda. My work isn't complete yet. My apologies. I have some resolutions. We have some resolutions to pass. So let me get to them quickly. I think I heard my stomach grumbling, so. We have some resolutions to pass. Okay. Let's get to the resolutions. Okay. I'm going to save a little time and do some together. So the first few resolutions, I'm going to bring them all together because they're covering the same topic. So, resolution 1. To receive the annual report and financial statement. The first resolution set out in the notice is that the audited accounts of the year ending 31st of December 2023, together with the reports of the directors and the auditors thereon be and are hereby adopted. I propose this resolution. Will somebody second the resolution? Mr. Livingston Young has seconded it. All in favor? Any against? None. Any abstentions? None. This resolution is passed unanimously. The second resolution is the reappointment of board directors. These are all ordinary resolutions. Each of these resolutions, I'm going to bring them together. So this is a resolution to reappoint Mr. Ian Kelly, Mrs. Monique Cottrell, Mr. Winston Thomas, Mr. Paul Buchanan. The resolution is moved that we reappoint all of these directors en bloc here. All in favor? Is there a second to this resolution? Will somebody second this resolution? Pardon me? Mark Barton is the second of this resolution. All in favor? Any abstentions? Any against? None. This resolution is also passed unanimously. Next resolution. Resolution 3. This resolution today concerns the authority of the board, that the board needs to fix the director's fee every year. It's an ordinary resolution. I'm now proposing this resolution that the board of directors of the company be and are hereby authorized to fix the enumeration of the individual directors. Will somebody second this resolution? Mr. Mr. Livingston Young. All in favor? Any dissensions? Any abstentions? This resolution is also passed unanimously. And the fourth and last resolution Give me 1 second. We just want to make sure that we are in compliance with the Companies Act. All right. Okay. Resolution 4. To reappoint the auditors and to fix their remuneration. The next item of business is also an ordinary resolution. It provides the board with authority to reappoint Baker Tilly as the auditors of the company and to fix their remuneration. I would like to propose this resolution that Baker Tilly, Chartered Accountants, having agreed to continue in the office as auditors of the company, be and are hereby reappointed auditors of the company to hold office until the next annual general meeting at a remuneration to be fixed by the board of directors of the company. Will someone second this resolution? Seconded by? Daphne Drisdale. Okay. All in favor? Any against? Any abstentions? Okay, I'm going to have to do over just to make sure, in the abundance of caution, I'm making sure that I am totally in accordance with the Companies Act. I'm going to do over a resolution, which is the second resolution, which is the reappointment of directors. Directors Ian Kelly, Monique Cottrell, Winston Thomas, and Paul Buchanan. I'd like to propose this resolution that the retiring directors, and I've already called their names, be re-elected as directors of the company. Will somebody second this resolution? Patricia? Yeah. Patricia? Patricia Rameke. And this is a proposal to be done, this is a resolution that is done en bloc. Okay, and it is seconded en bloc. All in favor? Any against? Any abstentions? None. This motion is also carried unanimously. Thank you. Now we're at the conclusion. So I want to thank you again, each and every one of your shareholders, to have taken the time out. We also want to thank our team members who are here for their support and for their hard work. For those of you who are members of the CFF, if you're shareholders in CFF, we have that that AGM next. But for now, it is the end of Derrimon Trading's 11th annual general meeting as a public company, and so we want to bring this meeting to a close. So we want to thank you for your time, and the meeting is officially closed. Thank you.